Hi again, this is Rick with AmazingAccuracy.com. Today is May 7th, 2023. It's currently 1:40 p.m. Chicago time. Hey, what I wanted to do, today's Sunday. Okay, trading in the extended hours start tonight, but uh, looking at the S&P, I want to be ready for this coming week, and I wanted to share with you some of the work that I've done and what I'm looking for to happen this week. All right, so without further ado, let's just get right into it. Right here, you're looking at my provisions charting software, and you can see there's a whole bunch of dates and arrows and all kinds of stuff here. All right, I'm going to cut right to the chase here. I want you to take a look over here. You see this swing top? This was done on 5-1. Okay, that was a predicted swing top. We got that there. We were looking for 5-4 minus. We got that right there. Now the minus just means that they're possibly 5-3, a day early, right? Minus one, right? Okay, but it did occur on time, 5-4. Let me put the oversolds on here. I usually like to see that. Now you can't see the wick on 5-4 there, so let me hide all this. There it is. See that wick? There it is. That was the low. And then on 5-5, you see that prices just really took off here and found resistance at this 45-degree square. Now this is the Gann square. You got 45, 90, 180, whatever. I put the 45-degree off the low here, and then for 5-5 was anticipating that it would hit resistance, hopefully. And to show that that's a fact there, let me just, I'm in my FDates FDates membership forum here, membership site, I should say, and here it's market commentary and comments. And on 5-5, you see 5-5 right here, and we go S&P prep for next F date, meaning the one that was going to come after 5-5. A lot of yada here, but you'll see that I have this chart here, this daily chart of the S&P 500, and you'll notice that I'm pointing to 3 possible resistance areas, and you'll see that I've got an arrow pointing to this fib resistance here at 41.75. There was one at 41.51, and then you'll see this line here, 41.64. I couldn't get it granularly down to 43.75, but I did happen to note it right here. You see where I wrote right here, 41.6375. And this was, again, this was at lunchtime. So the market had not gone up to that location just yet. Let me go ahead and close that. But as you can see, the day closed with it going to 41.6325. Pretty close, right? By half a point. So they call it half a handle, I believe. Anyway, so that worked out pretty good. But now, what am I expecting to happen here? All right, let me just stretch this out a bit just to make things look good. Okay, first off, let me share with you some of the reasons why I was expecting 5-1 and 5-4. You can see we got other ones too, by the way. They're all marked, but I'm going to just focus on 5-1, 5-4 because I don't want to go that far back. Okay. 5-1 made this top, 5-4 made this bottom, and that the reason why I want you to focus on that, because look at the sequence, 5-1, 5-4, what's next, right? 5-1, 5-4, what's next? That's what we're going to talk about. Down here, this is called the seasonal data report, and basically what it does is it takes a bunch of years of historical data, goes through and looks where tops and bottoms had happened, what direction the market, was it bullish, bearish, and whatever, and churns all that and gives us a seasonal tendency. Seasonal tendency is part of the world of cycle analysis, which is the world I live in. Cycle analysis is my preferred method for forecasting market turns, and I've been doing this way back to the late 80s, and I stick with it because it really does work. If you look here, you'll see that right here, you see we got 5-1. See that? Well, take a look at here. It says peak valley, and it's darkened in. All right, peak valley, that means top for peak, right? Swing top, valley, swing bottom. See this right here, 5-1? That's called the peak. Yeah, at least in my terminology. Probably no one else uses that. I don't know. And I call this a valley, but it's a swing bottom. Okay, so peak, valley, swing top, swing bottom. 5-1. Then you notice here that It goes over till 5.4 before we get the next peak valley. Pretty good, huh? 5.1 and then 5.4. And then look what follows. 5.8. That's tomorrow. 5.8's tomorrow. All right, so now that we've seen this, that's one reason why I was looking for 5.1, 5.4, 5.8, 4.25, 4.18, things like that. But it's not always so precise. So there are other things that I need to do. And that includes, you should always check support resistance on the list. Anyway, let me show you my F-date application. This is one of the applications I use for calculating my F-dates that is put in a report form and uploaded onto the membership every week. It's called the F-dates report. But I want you to take a look at these geo waves right here in my F-dates application. What do you see right there? 5.1, 5.4, 5.8, okay? Now, obviously, these right here, the rest of it is going to be blurred because that really is for the benefit of our members. And I still have to go through these and compare them to other indications. And when I get a confluence of indications, then I will stamp my seal of approval on it and put it on the F-date report. But I wanted you to see this. 5.1, 5.4, 5.8. That's in agreement with seasonals. And yet this has nothing to do with seasonals. This is a whole different algorithm altogether. So I really like it when they're all in agreement. All right. So if we go back to the daily chart here, take a look at this. Okay, we went from a top of 5.1 down to a bottom of 5.4 in oversold territory. And then we went up on 5.5 when we hit resistance. Now 5.5 is just one trading day early of 5.8 and could possibly put in a swing top of its own. I mean, it's certainly making a case for itself here by hitting resistance and pulling back. However, what I am really going to be looking for is I want to see that 5.8 bar tomorrow. I want to see trading tomorrow actually move higher than 5.5 and perhaps just go and hit this resistance right here. Because if it does that, if it stops right here, which is what, 41.73, yeah, around there, 41.73, in that area right there, if it was to hit that first thing in the first hour or two of trading tomorrow, and just not seeming to, like it's just on the intraday charts, the hour charts, the 30-minute charts, all that, we see that it's overbought and really ready to come back down again. And we're going to look at that in a second. Well, then I think I'm going to put on some puts, some SPY puts in this case, just like I did back here for 5.1. Yes, I bought SPY puts because I was expecting 5.1 to become a swing top. It went down really hard on 5.2. I got out. It went down for 2 more days. Yes, I left a lot on the table, but I took a lot too. See, I'm not going to get greedy. So I took a chunk out. I wanted to get out. This market is so choppy. I don't want to see my profits go disappearing. So I go in for a day or two and I get out. That's just what I do. But anyway, if I see tomorrow prices moving up just a little bit higher than the 5.5 high and it hits that resistance, and I start seeing that thing's going, oh man, I just can't go any higher, I'm going to put on some SPY puts. And the reason for that is because I'm expecting this to likely go down 1 to 2 days to 5.10. You can see I got an arrow here. I got the 5.9, 5.10, a bunch of other little letters here. And this just basically tells me, how did I come up with that date? Well, there's 4 or 5 different methods that I use. And when they're in agreement, I really pay attention. It doesn't guarantee that a turn will happen, but I'm going to pay attention. You know what I'm saying? Especially, what if it came down to 5.9, 5.10 and it hit support? Maybe it'll hit this support, maybe not. I'm just pointing to the day. I'm not really pointing to support. But what if it hits support there? Or maybe it hits a moving average. I'll put the 8, 13, 21, 34, 55, and 100, 200 moving averages on there. Stacks, they call them moving average stacks. I'll put those on there. if I see it maybe hitting that and on up till 510, right? And it just doesn't seem to want to go to, well, hey, sell my puts, right? Get out of there. Maybe I'll turn around and go buy some calls. That's just what I would do. So anyway, you'll see here that after 5.8, I have 5.10. And that's on the seasonal. And let's see. Okay. We do not have a geo for 510. We have a geometric analysis algorithm 2. Uh, but that's it. It's not as strong as this 512 here. So anyway, that doesn't mean it can't do something on 510. It's just that, I have to be very cautious because it's not screaming at me and going, yes, I'm going to turn on 510. It's saying, well, he thinks it's 510, but he's not sure about 510. And he being, of course, this indicator, that indicator, and so forth. All right. So anywho, that's what I'm expecting. So tomorrow, 5.8, I want to see prices move up a little higher. Maybe it does, maybe it doesn't. Maybe it shoots up to the moon. I don't know. I don't have a crystal ball. I only have the next best thing, and that's my cycle analysis, right? And that's what you're here to look at, right? Is, well, what does this guy have? Well, I got a little bit of cycle right there. I'm psycho. So anyway, on 5.8 tomorrow, I want to see a little bit there. So let me go to the trading view charts here real quick. All right. Here I have the 15, I have the 10, I have the 5-minute charts on the ES minis. Okay, so that would be the S&P 500. And you see that I put that 4173 dash line up here because I would like to see that maybe you'll do that tonight. Maybe you'll do it tonight, overnight session. Maybe we'll see prices rising to 4173 and hold. Maybe hold and start breaking away and whatever. If I see that on an intraday chart, that's going to look pretty darn good to me that we're probably likely going to have a down day tomorrow, and it just went up, hit that resistance that I showed you earlier, and it's going to be wanting to go down. Of course, I'm going to want to see my intraday indicators kind of suggesting that could possibly happen because let's say they're overextended, right? That they're overbought, right? Well, take a look down here. I got MACD. Everybody likes MACD, right? Here's MACD, all right? And look what happened. See, MACD made this rounding top here, just like the 15-minute chart made this rounding top here. Pulled back a little bit here, just a little bit of momentum loss, but then volume kicked up. That's what these little blue arrows are for, is but volume kicked up and it pushed higher to end the day to hit that resistance that we saw on my provision charting chart on that Gann square resistance. Pushed up, hit it, stopped dead in its tracks. Sellers came in. They must have the same squares as I do. I don't know. But they came in and they sold it off at the very end of the day. It looks like the last hour and a half right here. So it did that, but look at when it pushed up, the MACD did not make a higher. See, the MACD is lower or equal to here. Let me just get a horizontal line here. And boom, you see that? It just two tops right here in the MACD, but here this top is higher than this top. That's called a bearish divergence because price kept going up, but the MACD did not follow with its momentum. The momentum was waning on that second push up, and that caused divergence. You can see it even more clearly on the 10-minute chart right here. Notice you got this high right here. Notice the MACD here. I should show a little more MAC. I'm going to show a little more MAC here. Okay. Don't be shy, MAC. I'm going to show a little more. You see that high right there? Okay. And you see that right here? Then it goes down. Then it goes down. Then this pushes up one final push up. It hit resistance here. I got my support resistance dynamic lines in here. If you got Trading View, it's free. Just go put it on there. I love it. But it came up and it had hit that. But look at the MACD did not follow suit. There was not enough momentum here indicated to equal the momentum that made this one here. So we had all this momentum here. We just had this little bit of momentum here. But look at this, went higher. It's like going higher on fumes. right? Okay, so this is another strong indication that we have what's called bearish divergence. Let me draw a line here. You can see we put a line here across those highs, right? But if you look at the MACD, well, you don't have that. You actually have a downward line right there. You see that? It's diverging. See, those two are diverging. And also on the RSI, it had overbought here, and then of course it's working its way down. And I believe right now it's, well, it's not quite yet. You see that green line? That's the 50%. So it's still on the strength side. So we still have enough. We may have enough to do one little push up to here. You can see on this 10-minute MACD here that you know, we could be looking to make one of these things. That means one final. Come on, come on, come on. We can do it, right? Okay, I hope so, because that would be like a no-brainer. I would put those puts on. But if it doesn't, then I got to be a lot more careful as to my timing. And of course, I'm going to be getting at least 40 days or more of time value on my options. Because if I'm off a day, you know, and I feel like, hey, this intraday information is showing me that the market is exhausted and it is ready for a pullback for at least a day, I can hold on for one extra day or so if I've got enough time on that option. Short of this market just taking off to the moon. If it took off to the moon, I'd be so far out of the money at that point that it wouldn't make sense for me to stay into the option. I just cut my losses and hide and never show my face again, right? But anyway, you can see right here, for example, this is the 1 hour, S&P mini. Look at this. Okay, the TTM squeezy thing here has its own little momentum lines here. You can see that that thing is really like wanting to, you know, like I'm right at the peak. I'm right at Everest right here. Look at the MACD. It's already starting to lose a little bit of momentum right here. You can see that right here, a little bit of momentum. And we could be crossing from overbought. This is overbought RSI. We could be crossing the average, RSI moving average line. That's the yellow line here. We could, you know, maybe, who knows. But, you know, everything here kind of shows that, hey, we could be looking at hitting that 41.73. That would be right about here. And then going down for tomorrow. So I want at least one day down for my put options. But according to the seasonals, we could see as much as 2 days down, get it to go all the way down to 510, and that would be really sweet. All right, well, I think that's just about it. Let me see, have I forgotten anything? I don't think so. I think I've covered everything. So that's what I'm looking for tomorrow, people, is I'm looking for some kind of reversal tomorrow so that 5.8 can make a swing top and what we call here a peak, right? Oh, you're not looking at that chart. A peak, see here, 5.8, then go down maybe to 5.10, or at least 5.90 at the very least. And, you know, grab a one day out of it. But notice what we got here, 5.8, 5.10, 5.12. That's choppy. It's kind of telling me we may have a choppy week ahead. So anyway, there you go, folks. I hope you like this. Please, if you like this analysis, if you like this information, if you'd like to see more of this, I would really appreciate it if you hit the like button and subscribe to this channel if you haven't done so already. It's the only way that this video could rise closer to the top. And of course, that would help me in order to start putting more of these out, because I will know that you want this kind of information. Well, anyway, I will see you in the next video. Happy trading. Bye.